Okay, so for weeks now, I've shown you everything that can possibly go wrong. The forced withdrawals, the widow's penalty, the tax on your Social Security, the Medicare surcharges, the fees on money that was never yours in the first place, and what the IRS takes from the people that you love the most. 6 ways the same tax bomb goes off. And if you've been feeling a little overwhelmed by all of it, that's a good thing. That means you're paying attention. But I made you a promise. I told you that at the end of all of this, I'd show you how to diffuse it. So here it is. And it's not 6 different solutions for 6 different problems. It's one decision, one move that reaches back and quiets every single one of them at the same time. Now, I already know the objection forming in your head because it forms in almost everyone's head. But David, doesn't that mean I have to pay a huge tax bill to do it? And here's what I need you to understand, because it changes everything. That tax you're so afraid of paying, you have to remember that it was never your money. And stay with me, because once you see what I'm about to show you, you're going to stop looking at that tax as a cost, and you're going to start seeing it for what it really is, the best investment that you may ever make in your retirement. So let's name it. The one decision is this. You move your money out of the tax-infested world of the traditional IRA and 401k and into a tax-free world permanently for the rest of your life. The tool that does it is a Roth conversion. And I know for some of you, the moment I say that, a wall is going to go up because you've heard the number. If I convert, I'll owe a fortune in taxes. So let's deal with that head on first, because it's the single biggest reason people never fix this problem. And it's built on a complete misunderstanding. Think back to the very first thing that I taught you in the series, the silent partner. The IRS already owns a piece of your traditional retirement account. That tax was always going to be paid. It was never a question of if, only when, and at whose rates. So when you do a conversion and you pay that tax, you're not losing your money. You're settling a bill that you already owed. You're buying out the silent partner. And the moment you do, he's gone forever. No more claim on your account. No more deciding his share later at rates neither of us can predict. That's the first shift. The conversion tax isn't a cost. It's you paying off a debt that was always hanging over your head on your terms at today's known rates instead of theirs at some unknown future rates. Well, paying off a debt isn't exciting on its own, is it? So let me show you the part that actually is, because this is where you stop thinking like a taxpayer and you start thinking like an investor. Here's the mistake almost everyone makes. They look at a conversion, they see one number, the tax, and they stop right there. It costs too much. End of conversation. But no real serious investor ever evaluates anything by cost alone. They ask one question. What do I get in return? So let's actually ask it. What does that one decision give you back? It gives you a lifetime of growth that you will never be taxed on again. It ends the forced withdrawals. No more being told when to take your own money. It can stop your Social Security from being taxed because tax-free income doesn't count against you the way traditional withdrawals do. It can keep you under the Medicare surcharge lines. It ends the fees you were paying on the government share of your money because the government share is gone. And it lets you pass that money to your family free and clear, no ticking tax bell waiting at the door. Now, add all of that up, a lifetime of it, and compare it to the one-time tax that you paid to unlock it. For a great many people, when you honestly account for everything that you get back, the return dwarfs the cost. And it's not even close. That's why I say it may be the best investment you ever make in your retirement, not because of what it will cost today, but because of everything it stops costing you for the rest of your life and your families. And there's a timing piece to this. You're paying that tax at today's rates we can actually see, given everything happening with the national debt. Betting that rates will actually be lower decades from now is a bet very few people want to make. Handing it down now at a known number takes that uncertainty completely off the table. But here's what most people miss. A conversion by itself is only half the move. A Roth is just the tax treatment. What actually makes this a retirement solution is where that money goes once it's inside. Because remember that we learned at the very beginning of this whole channel, the descent In retirement, protecting your money matters more than chasing it. So the money we move into that tax-free world, we position for two things: protected growth, so your foundation isn't exposed to a market crash at the exact moment that you can least afford it, and a tax-free income that you can actually live on. The government can't tax, can't use to trigger taxes on your Social Security, and can't surcharge your Medicare over and over again. That's the whole thing coming together. The conversion unlocks the door. Protected growth and tax-free income are what's waiting on the other side. Tax-free, protected, and finally, truly yours. So look at what one decision did. The forced withdrawals, gone. The widow's penalty, diffused. The tax on Social Security, sidestepped. The Medicare surcharges, avoided. The fees on the IRS's share, eliminated, because there is no more IRS share. And the tax bomb waiting for your family is completely disarmed. 6 explosions, 1 decision. That's what it means to defuse the bomb. Now, I'm not telling you it's simple or that it's the same for everyone. It isn't. The right amount to convert, the timing, the sequence, how it's structured, what it goes into, that's real planning. And it depends entirely on your situation. That's the part that I do with people one-on-one. But the principle behind it, you will now understand it better than most people ever will. So here's where I'll leave you. And here's what I don't want you to do. I don't want you to guess, because that's what most people do. They make one of the biggest financial decisions of their entire retirement based on a rule of thumb, a gut feeling, or an advisor who tells them to just spread it out without ever running the actual numbers on what a conversion could give them back. And some of you have actually tried. You talked to your accountant or your advisor, or you ran the numbers yourself, and you came away thinking it doesn't make sense. I'd have to live to 90 for this to pay off. Now, I hear that all the time. And here's the problem with that math. It's not that you did it wrong. It's that the usual way of calculating this only looks at one thing: the tax that you pay now versus the tax you'd pay later. Break-even age, that's it. But you just spent this whole series learning that the tax bomb isn't one thing. It's 6. So a calculation that only measures one of them is missing almost the entire picture. It ignores the forced withdrawals you escape, the Social Security that stops being taxed, the Medicare surcharges you avoid, the years of fees that you stop paying on the government share, and the tax-free legacy that you leave to your family. And there's another one I hear. People say, but if I pay that tax, that's money leaving my account. Now I've got less growing for me. And I understand why that feels true, but watch what it misses. That tax money in the traditional account was never really growing for you. It was growing for the IRS, because the bigger that account gets, the bigger their share gets right along with it. When you convert, yes, the tax comes out, but every dollar that's left grows 100% tax-free for the rest of your life. No partner, no skim. So you're not choosing between more money and less money. You're choosing between a bigger pile that's partly theirs and taxed forever, and a pile that's smaller today, but entirely permanently yours and tax-free for the rest of your life. Most people fixate on one number, the lost opportunity cost of the tax that they pay, and they never stop to see that they're fixating on one lost opportunity while ignoring 6 others that are often far bigger, and while creating a lifetime of tax-free growth in the process. That's the difference between guessing and knowing your real number. So that's exactly what I do with people. We sit down, and if it makes sense for you in your situation, we run what I call a Roth conversion investment analysis. We treat the conversion the way you treat any serious investment. We calculate what it would actually cost you and what it would actually return to you over the rest of your life in real numbers, your numbers. And here's the beautiful part. When you actually see it, one of the two things happens. Either you discover this could be one of the best financial moves you ever make, and now you can make it with total confidence. Or you find out it's not right for you and you just avoided a costly mistake. Either way, you win, because either way, you finally know instead of just guessing. If you want to find out your number, there's a link below to sit down with me. That's the conversion or conversation I'd love to have with you. Now, I already know that even after all of this, some of you still have that voice in the back of your head. Yeah, but what about? What about the 5-year rule? What about pushing myself into a higher tax bracket? What about my accountant who said don't? I'm too old. I'm too young. My advisor told me to wait. I've heard it every single one of those. Every objection there is. And here's what I've learned in 28 years. The objection that you're holding on to right now might be the very thing standing between you and the best financial decision of your entire retirement. So that's exactly where we're going next. Over the next several videos, I'm going to take these objections one on one at a time, and show you what's really true underneath each one of them. Because you deserve to make this decision with your eyes fully open. The Tax Bomb series ends here, but the answers to the questions still holding you back are just getting started. Subscribe, and I'll see you in the next one.